Hi guys, today we're going to look at trend angle, how to identify the angle of a trend inside of TradingView. So let's dig right in. Step 1 in identifying the angle of the trend is to draw the trend line itself. So I'm using gold for our chart to draw the trend line. So let's go right in. This is going to be my top. Now, one thing you have to remember when you're trying to identify the angle of the trend is it needs to be the highest point of the trend connected with some of the pullbacks. And say now we have two touch points that we are drawing the trend line off of as usual. And you can see here that there's negative 46 degrees, so it's a 46-degree angle. Perfect. We have information about what kind of a trend we're looking at. How do you get that activated? Double click onto the trend line or right click, hit settings, and then select the angle option. Once you select it, it's going to show you the degree every time you click on the trend line. You click outside, it's going to go away, but you click on it or you hover on it, it'll show you the angle of the trend line. Now, the significance or the importance of looking at the trend angle is primarily if it's within 45 to 50 degrees, it's ideally considered to be better. In terms of there's a channel, there's a range within which price can move, so it becomes a more predictable spot to trade within. If it is, for example, in this situation, it's narrower than 50, it's going further down, you can't really expect that the break of that structure means price is just going to keep going up. Now it's a bullish trend. It's not necessarily. It's very unpredictable, and in this situation, it's very dangerous to trade against it. And this is what I would generally not consider a trend, and rather consider it more of a resistance line within which price is moving. When price breaks above it, we can consider that now price is about to do a little bit of a push. Maybe there's a range or a strong level of resistance where price could tap and then continue down. Doesn't necessarily signify that it's a change in trend now. When price is more closer to the 46, 45, maybe between the 45 and 50 range, you can expect that that is a more established trend line where price is moving through channels and giving you more predictability across different lines of supports or resistances or demands and supplies. And that's why it's really important looking at it from that perspective. If it is, say, further wide, if it's less than 45, less than 40, let's give it a grace of up to 40. There's no hard and fast rule that it has to be 45. But based on experience, I've seen it between 40 and 50 is the sweet spot. More closer to 45, I've seen better trends, and it gives you more perspective into trading into those trends. The wider it is, the more difficult it becomes because the channel is going to be extremely wide, right? So, for example, the channel bottom for the existing trend would start somewhere around here, moving down all the way down here. Now, this is a very wide range. If price was tapping up all the way here, it's a difficult spot to say, okay, price is now going to tap into that range and then come back down. It becomes unpredictable. So the sweet spot ideally stays within the 45, 46, 47, 45 to 50, 40 to 50 kind of range, right? And now the bottom one tells you there's a falling wedge being formed, and then you could be trading this because now that could give you a better break of structure, a break of trend, and a reversal pattern giving you indication of further buys.